Natural gas futures in the U.S. continued their downward trend for the fourth consecutive session on Friday, pressured by disappointing storage data and high supply levels. Traders are grappling with bearish sentiment as they assess mixed signals from weather forecasts and production outlooks. Gas price is currently below the $2.10 resistance, with traders responding to the EIA report, indicating a 22 billion cubic feet increase in working gas storage. It appears that traders have already anticipated and factored in the upcoming bearish storage report expected next week. Nevertheless, the next three storage reports are expected to be bullish due to the extreme heat forecasted throughout August. This situation is finally going to gradually diminish the bearish trend when the storage line crosses the maximum threshold line. I think this is a very positive sign as we approach the heating season. Much of the U.S. is expected to experience above normal temperatures late this weekend and continuing into next week, which could significantly drive up demand. Furthermore, forecasts predict extreme heat throughout August, increasing gas demand even more as electricity generation ramps up to power air conditioners. The nat gas market currently seems bearish in the short term due to higher than expected storage builds and ongoing supply pressures. To counteract the selling pressure, the market would need to see a combination of the following factors: a substantial rise in cooling demand caused by persistently above normal temperatures, unexpected production cuts or disruptions, a series of below-average storage builds in future EIA reports. Currently, we have two of the three necessary factors, so we might see a trend reversal soon. Moreover, recently EQT Corporation reaffirmed its 2024 sales volumes, indicating a continuation of supply curtailments introduced earlier this year to balance the market. Toby Rice, CEO of shale driller EQT Corporation, has stated that natural gas prices would soar if fracking were banned. His comments come as Kamala Harris emerges as a candidate for the Democratic nomination following Biden's withdrawal from the re-election race. Harris has a history of opposing offshore drilling and fracking, indicating she could be a strong opponent of the oil industry if she wins the White House in November. And now I must remind you that the number of active gas rigs is currently at its lowest level in the past 3 years. Gas prices are falling on Friday, with traders watching last week's low at $2.04 and the psychological $2 level as potential support. However, I don't believe short sellers will make it easy for counter-trend buyers. I think the optimal level to start looking for counter-trend activity, such as profit-taking and bottom-picking, is located in the support zone around the $2 level. I expect gas prices to consolidate in the $2 to $2.20 range before extreme heat throughout August and strong demand drive prices to the $2.50 resistance level. Please like, subscribe, and comment to support the channel. See you in the next one.